In June of 2020, a truck company with zero revenue, zero trucks sold, was worth more than Ford. Its name was Nikola. 3 months later, a short seller proved one of its working trucks was just rolling downhill with the engine off. And this was not an accident. It was the whole game. Between 2020 and 2021, Wall Street raised over $160 billion through something called a Spac. Most of it evaporated. But the mechanics of how it happened? They repeat in every single bubble. Here's what almost nobody understood at the time. A Spac is a company that goes public, with no business inside it. None. Draw, empty shell company then raises cash from public then promises to buy something later. It's called a blank check company. You hand over your money, and a celebrity sponsor promises to go find a real business to merge with, someday. Right, you're buying a promise, not a company. In 2020, 248 of these blank checks hit the market, raising $83 billion. The next year it nearly tripled. 613 SPACs. $162 billion. Ask yourself something. When a financial product that's mostly empty triples in a single year, who's really buying? And why? That's the question that unlocks everything that came next. Bubbles need salesmen. This one had superstars. A venture capitalist named Chamath Palihapitiya became the face of the frenzy. The press called him the SPAC king. He took Virgin Galactic public through a Spac in 2019, a space tourism company that had never flown a paying customer. Retail investors piled in. Not because they'd read a balance sheet. Because a famous person said the future was here. Sketch, famous face then hype then retail buys then price detached from value. And the projections these companies published? Pure fantasy. SPAC rules let sponsors make wild revenue forecasts that a normal IPO could never legally publish. Right, forecasts, not fundamentals. So a pre-revenue company could promise billions in future sales, with almost nobody checking the math. Sound familiar? It should. Every bubble sells tomorrow to avoid explaining today. Then came September 10, 2020. A research firm called Hindenburg published a report on Nikola, the truck company worth more than Ford. The report alleged the company had faked a promotional video by rolling a truck down a hill. No engine. Just gravity. The founder, Trevor Milton, resigned within weeks. In 2022, a jury convicted him of fraud. He was sentenced to 4 years in prison. And Nikola wasn't alone. As the deals closed, the truth arrived. Draw, hype peak then deal closes then real numbers revealed then collapse. By early 2022, the index tracking post-merger SPACs had fallen roughly 65% from its high. Companies that merged at $10 a share traded for pennies. WeWork went public through a SPAC in 2021 and filed for bankruptcy 2 years later. Here's what nobody tells you. You didn't need a crystal ball to avoid this. You needed a checklist. Right, the 3 warning signs. Warning 1. The business had no earnings and often no revenue at all. You were paying for a story. Warning 2. The pitch leaned on a famous name instead of the numbers. Ben Graham warned about this a century ago. As Graham put it, in the short run, the market is a voting machine. In the long run, it's a weighing machine. Warning 3. Everyone was buying because the price was rising, not because the value was there. That's speculation wearing an investing costume. And this is educational, not financial advice, but history rhymes for a reason. Sketch, price up then everyone buys, then price up more than reality arrives, then crash. Every bubble arrives in a new outfit. Tulips, dot-coms, SPACs, whatever comes next. Right, a new costume. The same trap. But underneath, the machinery never changes, a thrilling story, a famous face, a price disconnected from value. The margin of safety isn't a formula. It's a habit of asking one question: what am I actually paying for? What's the most obvious bubble you can spot in the market right now? Drop it in the comments, I read every one. And if this changed how you see the next hot thing, subscribe. Tomorrow, we're breaking down the one balance sheet number that reveals a fraud before the headlines do.